When it comes to investing, everybody knows Warren Buffett and his company Berkshire Hathaway. The way they have been picking up those stocks, the value companies who have been producing a lot of growth and the consistent dividend, which is also being reinvested into the stock and producing a compounding return on their investment over time. This has been a magic secret sauce for a lot of investors who try to follow Buffett's logic to pick up the stocks which are going to produce a lot of return for their shareholders. One of those stocks is Apple. And if you look at the allocation of Apple stocks among all the ETFs and mutual funds, you will realize the largest accumulation of Apple stocks has been with Vanguard. So they have around 8.46% of total Apple stock allocations. The second number is Berkshire Hathaway, which is around 5.86%. But the interesting thing is that allocation only started in 2016. In fact, the allocation in 2016 was so little, you can't even see that bar in the chart. So the actual allocation started in 2017, and then it has grown over time. Okay, in the next chart, what you can see is the total allocation of Apple stocks by Berkshire Hathaway. It only happened between 2016 and 2018 in the 2 years period of time. Okay, and since then he sold a little bit and then he stayed consistently with the amount of stock that he owns. But when it comes to valuation, this is going to surprise you. So the valuation only blew up after 2020. So when he accumulated those Apple stocks between 2016 and 2018, the valuation was around $4 billion, but then it quadrupled in the next 4 years, from $4 billion to $174 billion. That's a massive return on the investment, around 650% return on the investment. That's a massive. It has outplayed the S&P 500 by big time. Okay, so what is Buffett's logic? So he doesn't even understand technology business. He doesn't like technology business. He famously says he doesn't buy the stocks. He doesn't understand the business. But why Apple? Well, the way he looked at Apple was a commodity business, a consumer producing business. Okay, and the reason why he looked at it that way is because the brand loyalty. He knows there is a lot of loyal fans of Apple who are willing to spend money to get an upgraded iPhone. That brand loyalty was one of the major factors of his decision to buy Apple. And of course, that was not just the one factor. He also looked into the fundamental as well. So the way he challenged his portfolio manager to find a stock that should be producing XYZ returns. So his criteria was, okay, get me a stock that has forward PE lower than 15. PE means price to earning ratio. For the next 12 months, it has to be lower than 15. Okay. And the future growth has to be more than 7% in the 5 years. The market cap has to be more than $50 billion. That was his criteria to filter the stock that he will be willing to invest into it. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. So I was reading this Wall Street Journal where they actually use this criteria from Warren Buffett, and then try to find the next Apple stock. So they added one more thing into the list. Number one, market cap has to be $50 billion. Price to earning, forward looking, has to be less than 15. The 5-year expected earnings growth has to be more than 5%. And then the sales growth in the last 5 years, like the previous 5-year sales growth, has to be more than 5%, excluding all the financial, limited partnerships, REITs, real estate, or any Chinese companies. So when they apply this logic, they come up with two stocks. Number one, EOG, which stands for, it's an energy company, stands for EOG Resources. They have around 75 billion of market cap. Forward PE is 10.66. The expected earnings in the next 5 years is around 13.73%, and the last 5-year sales growth is 6.3%. The second stock they picked was T-Mobile. That has a market cap of $193.3 billion, 14.71 future PE, and 6.3% of expected earnings growth. And the last 5-year sales growth is 12.13%. So they filter out these two stocks based upon that criteria. So Berkshire Hathaway also owns T-Mobile, around 5.24 million shares, which is around 0.2% of its portfolio. But one thing that flagged out was their 5-year expected earning growth is slightly lower than Buffett's criteria, which is 7%. But this is interesting. I'm not endorsing any of these stocks. The reason I'm sharing this video is very interesting to find how Buffett has been looking at the companies to understand the potential of generating multiple times revenue over the period of time, so that you can also look at this logic and apply into your portfolio to find the next Apple stock. Sorry for the interruption, guys. Just wanted to let you know that we have a team of realtors which is covering the entire GTA as well as some outside areas as well, like Brent region where I am based off, and I help out the clients in this region as well. So if you have any needs with regards to real estate transactions, buying, selling, investing, renting, let me know. There's a link down there where you can book a one-to-one consulting call with me, and we will be more than happy to help you out. Let's get back to the video. Anyway, if you like this video, give me a thumbs up, subscribe, and share this video with your friends and family. And check the links down below. There's some free stuff available in those links in the description below, and let me know what you think about that. And I'll see you in my next video.